Hello everyone, welcome to Finance Wisdom. In this video, we're going to talk about 8 motivations in paying off your mortgage early. If you are new to this channel, do like and subscribe to the channel. Have you considered paying off your mortgage early? This is a subject that many homeowners ask themselves, and it's also one that financial professionals discuss the most. According to a recent NerdWallet study of 100 experts, 56% believe it makes sense to pay off your mortgage as rapidly as possible, while the remaining 44% believe it does not. What exactly is a mortgage? In its most common form, a mortgage is a loan that you take out from a financial institution to buy a house, apartment, or other real estate consisting of property and land. In most cases, when you take out a mortgage, you can make monthly payments of interest and principal. Property taxes and insurance interest rates vary depending on what the current market rates and how much risk your lender is prepared to accept. The size of your down payment, your credit score, and your ability to repay debt are all factors to consider. The debt-to-income ratio, or DTI, is a term used to describe the ratio of debt to income. According to Investopedia, as a general rule, the debt-to-income ratio looks at the amount of debt a borrower has in contrast to their income. A borrower's maximum debt-to-income ratio while still qualifying for a mortgage is 43%. Lenders prefer a debt-to-income ratio of less than 36%, with mortgage or rent payments accounting for no more than 28% of total debt. What are the advantages of paying off a mortgage early? There are several advantages to paying off your mortgage early. Getting rid of your mortgage early will free up funds that would otherwise be used to make the monthly principal and interest payment, as well as cash for other investments. Some may argue that putting this money toward retirement savings rather than paying down your mortgage loan debt is a better idea. This argument compares the guaranteed rate of interest saved by paying off the mortgage versus the interest earned by investing the cash in the market. For example, if you can pay an extra $1,500 per month towards your mortgage principal at 3.5% interest rather than investing that same $1,500 per month in the stock market at 7%. The argument is that you are 3.5% ahead by investing. Here are 8 reasons why you should pay off your mortgage as soon as possible. Starting at number 1, eliminates monthly payments. Paying off your mortgage lowers your monthly expenses by removing your mortgage principal and interest payments, as well as your property taxes and insurance. If you follow the 4% or the 25 times the cost method, paying down your mortgage minimizes the amount of the retirement nest egg you'll require. A $1,000 monthly mortgage payment, for example, equates to $12,000 per year, implying that a 4% annual withdrawal rate would necessitate a $300,000 investment. As a result, getting rid of a mortgage payment might help you save a lot of money for retirement. You could use that extra $1,000 a month for things like trips or donations to charity. The number 2 is economic resilience. Economic resilience, according to the U.S. Economic Development Administration, is an entity's capacity to avoid, resist, or swiftly recover from substantial disruptions, such as shocks to its economic or revenue basis. The government maintains that economic resilience consists of 3 fundamental characteristics. The ability to quickly recover from a shock is number 1. The ability to tolerate a shock is number 2. And the ability to completely avoid a shock is at number 3. After the worldwide pandemic of 2020, the capacity to avert, withstand, and recover from economic shocks will be more visible than ever. Lower living expenses and income needs, for example, increase the capacity to absorb income reductions or losses by drawing on savings. In the same way, in recovery, lower resource usage increases the position to explore new or expand current income-generating options. Millions of homeowners in the United States are carrying thousands of dollars in postponed mortgage payments that they may not be able to satisfy as of the time of this video. In the long run, this might lead to foreclosures for sale or increased debt. The number 3 is a safe location to reside. By removing housing expenses as a barrier to retirement, paying off your mortgage greatly enhances your future lodging and economic stability. Having a paid-off home, for example, considerably lessens the obstacles of finding a place to live. For example, the option to give lodging utilities and use of property facilities, such as a pool, as part of the remuneration package might ease the decision to retire in place versus assisted living. House hacking via bringing in roommates, holiday rentals, or full property rentals are all examples of ways to fund other bills. Aside from the comfort of owning a home, homeowners who don't have a mortgage are better off financially than renters because property taxes, insurance, and maintenance costs tend to rise more slowly than rent increases. If you like this video, don't forget to like and subscribe to the channel. Number 4 is financial flexibility. Paying off your mortgage has several advantages, but the most important is the financial freedom it affords in terms of prospects. Because you are not paying mortgage payments, you have greater control over your monthly budget. In addition to the interest payments, a mortgage is a long-term obligation with a variety of expenses. This debt may be a major financial burden that takes years to repay, costing you tens of thousands of dollars in interest along the way. It's critical to pay off your mortgage as soon as possible if you wish to retire early. Whether you're currently financially independent or on your way to becoming one. Paying off your mortgage enhances your capacity to save, invest, and enjoy the rewards of your efforts. So having no mortgage debt allows you to concentrate on growing wealth. You may work fewer hours and yet keep your existing lifestyle after you are debt-free. Continue to work the same hours and increase your investment or look into other employment options that will provide you with more satisfaction, meaning, and purpose. The number 5 is cash flow and net worth. For most individuals, paying off their mortgage enhances their cash flow and net worth by freeing up money from debt payments to invest and build assets. For various reasons, a house mortgage is the most significant impediment to financial freedom and meaningful wealth growth. This is true for a variety of reasons, the most important of which is a tolerance for debt and deficit expenditure. When we take out a loan or finance something, for example, we are consuming future revenue streams. While this might be useful when making large purchases like a house or a vehicle, it frequently reinforces the use of debt to acquire items we can't afford right now. Using a credit card to pay for clothing, a computer, or a trip, for example, in each of these scenarios, we are relying on borrowed funds to pay for pleasures that we cannot currently afford. As a consequence, rather than embracing delayed gratification, we pay extra for the products and prolong the debt cycle as a way of life. Saving and investing allow us to make the purchases we want without incurring long-term debt. When a person's mortgage is paid off, their net worth rises considerably as the loan is eliminated from their total net worth. Because of this, most financial experts will tell you to pay off your mortgage before you retire. Peace of mind is at number 6. The peace of mind factor is one of the most important reasons to pay off your mortgage early. At its most basic level, debt removal helps you to sleep easier at night, knowing that you won't have to worry about making a monthly payment. You've experienced a sense of relief that comes with getting rid of a bothersome expense. Consider how you'd feel if you had that experience on a much greater scale. The majority of individuals have a mortgage as their highest debt. Similarly, home debt is one of the most significant impediments to most individuals realizing their actual financial potential, since it typically encourages deficit spending. Paying your mortgage early might be a wise financial decision. It is, however, a personal financial choice that can only be analyzed and evaluated if you have a solid financial education. The majority of people believe that financial literacy is something that you are born with. In truth, if you want to, it is a talent that can be mastered. Saving and investing comes at number 7. Furthermore, after your mortgage is paid off, you will have more money to save and invest in the future. Paying off your mortgage is a significant achievement that enables you to significantly raise your savings and investment rates. The extra cash flow may be transformed into passive income to sustain your preferred lifestyle in addition to increasing your net worth. Focusing on saving and investing rather than debt repayment will change your financial mindset, since you will be actively making financial choices for the future rather than paying for past errors. Also, if you have the self-discipline and patience to pay off the mortgage, you'll start to think about ways to improve yourself and make money that don't involve a job. Build wealth faster at number 8. Paying off a mortgage early, for example, is a terrific method to create money quickly during difficult times. This is particularly true in uncertain times, since it frees up resources to save and invest for the acquisition of appreciating assets. You may use a larger amount of your free cash to take advantage of market sell-offs, asset price depreciation, and other favorable investment opportunities if you don't have a mortgage. Paying off a mortgage is as much about reducing debt as it is about increasing wealth, since debt relief allows you to invest for long-term development. Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to this channel, and comment down below. Thank you and goodbye.